Hello and welcome. My name is Rupert Pontin and I'm Head of Insight and Communications at Brego. This is the Brego Auto Intel broadcast for July 2026, and we're going to have a look at what happened in the UK auto retail sector during the month, as well as have a look at a short summary of the political position in the UK to identify what it was that influenced retail consumer behaviour during July. So let's not hang around. Let's get underway, and we're going to start with the economic update. So July was a busy month from a political perspective, with Andy Burnham taking over as Prime Minister, and that happened on July the 20th. And he followed that inauguration with a shuffle of the cabinet, including the replacement of Rachel Reeves with John Healey as Chancellor of the Exchequer. And of course, Ed Miliband took over from Yvette Cooper as Foreign Secretary. Now it's time for the Prime Minister to deliver on what he's promised and to take a role really in trying to help resolve the wars in both Ukraine and the Middle East. And it's a fine line he's got to walk here. Talking of the war in the Middle East, and the news was not good, unfortunately, as there was an escalation in the attacks from both sides. And once again, the Strait of Hormuz was closed. And there is now a minimum of 90% drop in permitted traffic, and that really isn't helping. That's put pressure on energy costs again, and really, come the end of the month, the way forward still wasn't clear. Moving to the KPIs, in July looks to have been pretty positive overall, although commentators do point to uncomfortable underlying data that is sitting in the background that is going to impact the landscape going forward over the next couple of months. Starting with inflation, the rate dropped down to 2.6, and that was pretty surprising, as it was mooted to have been going up at worst, but staying where it was at best. But it was a relief to the whole country, and it has impacted on consumer behaviour. Once again, the Bank of England Monetary Policy Committee left the base rate unchanged at 3.75%, but this is changing slightly. So the vote split was 6 votes to 3 in favour of retaining it at 3.75. It has to be said, pundits have a tentative forecast for an increase sometime during the third quarter of 2026, and then again in early 2027, with a view that we will probably be at 4.25% by the middle of 2027. Now, let's hope that doesn't happen, but we'll just have to see how things progress. These two things did, however, help push consumer confidence index from -23 to -17. And also, importantly, the business confidence index rate improved significantly. And that dropped from -65 to -36, although that is a quarterly confidence index. And heaven knows what's going to happen when we get to the third quarter. Unfortunately, the stagnation of the property market continued, and the mortgage rate edged up a little bit to 5.1% for a 2-year mortgage. And that really has dashed any hopes of any recovery for the property market in the near future. The new problems in the Strait of Hormuz, there you saw the price of a barrel of oil start to rise during the month, and it rested at $84.60 at the end of July. And that resulted over the course of the month of an increase in the price of a litre of fuel. And it's now, or at the end of the month, it was sitting at £1.56. That hasn't helped the consumer with their expenditure. So on paper, it seems like it was a fairly stable month, but there is plenty going on in the background, and we need to watch out for that as we go through the coming weeks and months. So this is what happened in the new UK market, and we're looking at data courtesy of the SMMT, and we see that July showed registrations total 156,571 units, and that was an 11% improvement over July 2025, which is another excellent monthly performance given the economy, and it's certainly higher than was forecast. So private registrations for the month rose by 12.6%, and that represented a 37.1% of market share, which was up 0.3 of a percentage point on July 2025. Year to date, the increase is 12.1%, and that gives a 39.3% market share, which is 0.9 of a percentage point higher than it was in July 2025. Now, fleet registrations saw an increase of 9.5%, slightly lower than 10.5% last month, and that translates to a 59.9% market share, which is 2.2 percentage points lower than it was last month. Year to date shows an increase of 7.5%, and that means a 58.4% market share. That's slightly more than it was last month, but it is also 1.1 percentage points lower than it was in 2025. Looking at EV registrations, and they showed a pretty remarkable 44.5% increase month on month, and that represents a 27.5% market share, whilst year-to-date data shows a 28.7% increase and a market share of 25.3%, some 3.8 percentage points higher than in 2025. Remember, the target for 2026 is 33% of all registrations must be EVs. Turning to plug-in hybrid, registrations were up by 33.6% off the back of 24.9% the previous month, with a 14.9% market share, and that's up 2.4 percentage points on July 2025. Year to date, that's an increase of 37.7% on the previous year. Now, petrol registrations were down 5.2% after 4% last month, and the market share was at 40.1% and 3 percentage points lower than last year. Diesel were also down, and this is by quite a significant 17.7% for the month, with a 4.2% market share, which is 1.5 percentage points down on July 2025. Now, looking at OEMs, the top 3 OEMs were, of course, Volkswagen with 9% of registrations, Kia with 5.8%, Audi with 5.3% in third place. That was off the back of last month where we saw Tesla in second and BMW in third, VW obviously at the top. Top 3 selling cars, Ford Puma, Nissan Qashqai and Kia Sportage. We're back to the original 3 that we've seen for much of the year. There were 3 Chinese models in the top 10 in the form of the MG HS and the JQ5 and the JQ7. JQ are really making a mark at the moment. From the Chinese brands on sale in the UK, they took 22.7% of all registrations. Now, that does include Volvo, Smart and Lotus, just so you're aware. MG were at 4.6% and Volvo were at 3%. And it's worth pointing out once again, the Chery Group as a whole took 7.7% of all registrations, which is again enough to have had them in second place had they been just one group. So moving on and looking at the UK used car market, and we're going to be using the Brego Insight. Remember, Brego looks at whole market data and it sees over 900,000 adverts daily, which are added to our comprehensive database that spans over 20 years and consists of over 2.2 billion, yes, 2.2 billion data points. Now, these combined with our unique market-leading neural network-based valuation methodology gives our customers world-class data and insight. So what did July look like? Well, total adverts were up by 2.1%, and this shows a slight oversupply in the market. As we know, sales were up by 8.4%, but if we'd got stability there, we wouldn't have seen that increase of 2.1%. We did highlight this was a situation last month, and we just need to keep a close eye on it as we go forward, but it's likely that it will balance out in September. Pre-Reg adverts saw a significant jump, and they leapt up by 31.6% after 10.8% in June. And this really is the aftermath of the big H1 push for new car registrations and the continued need to get certain OEM cars into the market, no matter what the circumstances. This is certainly one to watch as the year progresses, particularly around the ZEV mandate. Trade adverts increased by 3%, which suggests that dealers had a little more confidence and kept forecourts full, although oversupply could also be a factor here. It's certainly not due to softer sales, because we know they were up by 8.4%. EV adverts increased by 6.1%, which is likely to be a further reflection of pre-reg activity again. It's not as a result of poor sales and significantly reduced demand, although there is some softness there. Hybrid adverts increased by 1.9%, and there remains a lot of interest in these, particularly as consumers that are still looking to reduce running costs and are still wary of jumping all the way to an EV. They tend to migrate to a hybrid. Petrol adverts increased by 3.7% and diesels by 1.6%. And this is down to a softening of demand for traditional fuel types, as expected, I guess. And these two together are probably the reason for the increase in overall adverts in the market, given the volume of vehicles that there are in the marketplace. Days to sale dropped from 38.3 to 39, which is positive, and that was really driven in part by the EV days to sale, which remained steady at 35 month on month, and that again reflecting the demand for electric propulsion and its reduced running costs. So, average used car sale price was 16,513, and the average EV sale price was 23,094, and the average hybrid sale price was £23,617. So to summarise, let's be in little doubt that the economic position impacted the strong used car sales result here. I think growing consumer and business confidence, despite some underlying factors, will have helped out quite a lot. Even with the distraction of the World Cup and the weather, as well as the new Prime Minister in the UK, the auto sector did achieve a good result, with new car sales, as we said, improving by 11.7% and used car sales increasing by 8.4%. You know, footfall and inquiries did improve in the last 2 weeks of the month, although closing deals has still been a challenge for everyone. Tenacity, well-prepped cars, those are the things that made the difference making sure you went back to your customer, kept in contact, and that way you're just removing objections to commit to buy. Used EV demand did tail off a little further in July. It's not bad, don't panic. And the ratio of EV sales to the whole market sales fell to 7.2% against 7.5% in June and 7.8% in May. And that's after a peak of 9.6% in April as the fuel prices started to climb. Now, hybrid demand improved a little as well. And as we said, that's because consumers are still looking to reduce running costs in one way or another. But they're still a little bit scared of that jump from fossil fuel all the way across to EVs. Wholesale demand was better during August. Dealers were seeking to keep their forecourts stocked, but condition is still an important factor, and that's to reduce refurb costs, but also making sure that they're taking consumer objections away during the sale process. Lastly, demand for Chinese cars has remained good, and the volume coming to the market is starting to accelerate as we see termination of the shorter PCPs that were introduced, and we're going to see some rental product coming back to the market in the course of the next few months. Value for money rules here, and it's also the appeal of some well-spec'd, different-looking cars that really appeal to the consumer. I know you will have found this an invaluable review of the UK auto sector. And if you need more guidance and insight, then please read the Brego Monthly Car Insight Report. That can be found on the Brego LinkedIn page, as well as on the Brego website. Alternatively, just reach out to me by phone, email, or LinkedIn, and I'll be happy to forward it to you. Now, Brego are also posting insight and updates on our YouTube channel, which is called Brego-Official. And in addition to which, we also sponsor the Dealerway Dealer Pod weekly podcast, hosted by Stephen Douglas, along with Scott Sibley and Jamie Capel. And we've also teamed up with Motor Trade Radio as their trade values partner, working with Philip Northard and Curtis Hutchinson, giving a monthly summary of used car trade activity in the market. Finally, as ever, I just want to reiterate that if you want to improve your market insight and your understanding of the nuances in today's auto sector, then you need to speak to the Brego team. Andy, Safi, and Nick would be delighted to show you how the Brego pricing and our market data will help you to improve your understanding of the market, but also set better, more relevant strategies around purchasing and retail marketing. Ultimately, they're here to help you increase profitability for your business. Remember, the team won't bite. They're here to empower you. Thank you for listening, and I'll see you again soon.